Certainly, I think there is a very strong call for China to do more to try and stimulate its economy. So far, China's efforts on the policy side has been focusing on improving the supply side of things to increase the productivity, to ask companies to invest more, and so on and so forth. But on the demand side of things, there still seem to be lacking in terms of concrete and immediate measures to boost China's demand. So we do hope that China will lean heavier on the fiscal side to boost its economy in the second half of the year, given that there's more room for China to issue more special bonds and to actually implement those money being raised through additional monies being raised through the bond market. Versus the monetary policy side, while China is obviously going through a more proactive reforms to its policy interest rates recently, but to actually have that being done in time to create more room for the PBOC to cut interest rates more aggressively, I think we are still some months, if not more, some quarters away. So we are only expecting very modest, like 10 or 20 basis points of cuts in the MLF, and maybe one more rounds of reserve requirement ratio cut in the second half of the year. So much of the heavy lifting will still go to the fiscal side.
Kelvin, dollar China 727 is where we're at on spot right now. Does China need an even more competitive currency or a weaker currency, and also can it afford it?
Yeah, that's a good point. So while we talk a lot about fiscal and monetary policy, currency is also under focus. And we think that if the main concern for China, or one of the biggest concern for China, is the sustainability of strong export performance recently, and also the risk or headwinds coming from potential US and European tariffs, then we don't think a weaker currency outright would actually solve a lot of that concern. So if anything, a sudden weakening of the currency or the signaling of it could actually trigger more market worries and potentially more capital outflows out of China. So on balance, we don't think China needs a much weaker currency. I don't think it will solve a lot of the immediate concerns, but rather I think they should focus on keeping it steady, at the same time promoting more renminbi internationalization, so that over the medium to long term, more money could actually come into China and into the renminbi. I think that will do more good than bad for China.